Apple just reported one of the strongest earnings quarters in its history, absolutely blowing past Wall Street expectations with record revenue, record iPhone sales, record services revenue, and massive cash generation. And this report sent a clear message to investors that Apple's core business is far from slowing down. For the December quarter, Apple posted $143.8 billion in revenue, up 16% year-over-year, crushing analyst estimates that were closer to $138 billion, while earnings per share came in at $2.84, a strong beat and nearly 19% growth versus last year, driven by higher margins and operating leverage. Net income surged to $42.1 billion, and gross margin expanded to 48.2%, showing Apple is not only selling more devices, but doing so at higher profitability thanks to premium pricing and high-margin services. The star of the quarter was once again the iPhone, which generated $85.3 billion in revenue, up 23% year-over-year, marking the best iPhone quarter in Apple's history, fueled by strong demand for the latest models across every geographic region, including the US, Europe, and a major rebound in China. Services revenue also hit an all-time record of $30 billion, growing about 14% year-over-year, driven by the App Store, subscriptions, payments, and advertising, reinforcing Apple's transformation into a recurring revenue powerhouse, with margins well above the company average. Apple also revealed that its global installed base now exceeds 2.5 billion active devices, a critical long-term growth metric that strengthens future services revenue and customer lock-in. Mac revenue came in slightly lower year-over-year at $8.4 billion, and wearables, home, and accessories declined modestly to $11.5 billion. But those softer areas were more than offset by massive strength in iPhone and services. One of the most market-moving moments came from CEO Tim Cook, who said Apple delivered a remarkable, record-breaking quarter, emphasizing that iPhone demand reached unprecedented levels and that Apple set all-time revenue records in every geographic segment, a comment that reinforced global demand strength rather than a one-region anomaly. CFO Kevin Parekh added that Apple generated nearly $54 billion in operating cash flow during the quarter and returned almost $32 billion to shareholders through dividends and share buybacks, underscoring Apple's unmatched ability to turn earnings into real cash. Following the earnings release, investors also focused on Apple's AI strategy, as management acknowledged progress through partnerships, including deeper integration with Google's Gemini AI, aimed at improving Siri and on-device intelligence, while Apple continues to build out its own AI capabilities internally. Apple also confirmed the recent $2 billion acquisition of Israeli AI startup Q1, signaling a more aggressive push into artificial intelligence across devices, wearables, and future product categories, even as the company remains characteristically quiet about near-term product roadmaps. Another major post-earnings takeaway was a strong rebound in Greater China revenue, which jumped roughly 38% year-over-year, easing concerns that competition and economic weakness would permanently impact Apple's position in the region. Shares of Apple moved higher following the report, although gains were measured as investors balanced the massive earnings beat against ongoing questions around AI execution, regulatory pressure, and slower growth in Macs and wearables. The bottom line from this earnings report is clear. Apple delivered a monster quarter, proved the iPhone franchise is still growing, reinforced the durability of its services business, generated enormous cash flow, and showed early signs of re-accelerating demand in China, while positioning itself for the next phase of AI-driven innovation. If you're tracking Apple stock, this earnings report reset expectations and reminded the market why Apple remains one of the most dominant and profitable companies on the planet.